You're listening to The Whole Truth, a Resources Rising Stars podcast.
Welcome to this latest episode of The Whole Truth podcast. I'm Paul Armstrong. I've just had a great chat with Darren Stralow. He's the Managing Director of Bellevue Gold. Bellevue is about to become Australia's next big gold producer at the Bellevue project in Western Australia. They aim to produce 200,000 ounces of gold a year from what is a staggering ore body with a grade of about 6 grams per tonne. Just to put that into context, there's many gold mines producing at 1 gram per tonne. The project will enjoy some low costs, but it also has a couple of other points of difference, one of which is that it will be what they call net zero. Darren explains that that's even better than being carbon neutral, and there's some good reasons why they'll be able to achieve that. One of which, of course, is the fact they've got 6 grams a tonne, and they've started from scratch with a new project, so they've got power stations that will use wind and solar and the like too. It's a fascinating project. It's been a great journey, but the best bit is to come. Darren takes us through how he plans to get there, all the work he's done to ensure it does what it says on the tin, and why shareholders stand to benefit so handsomely. Darren, are you a nervous man? You're about to flick the button on a very expensive project. You've invested a lot of money above ground and below ground here. You position yourself as Australia's next major gold producer. When you flick the switch, are you worried that the lights won't come on?
Great way to start, Paul. Thank you very much. And funnily enough, it's a question that I've been asked a few times over the journey about how, because this is my first managing director gig as well as, a new project that we're building in, what's been a challenging environment over the past few years. But look, all I can really talk to is the quality of the asset, the quality of the team that we've got together, the quality of the contractors that we've got on site that are actually carrying out the work. And that's what helps me sleep at night is knowing that, we've got all those building blocks to having a successful operation. And, the one thing about Bellevue that continues to perform strongly and continues to, show us its real strength is the quality of the ore body. And you see it through the grade control results that we put out to market and all the drilling that we're doing. We're getting fantastic productivities. We've got 3 rigs underground drilling. And, the results that we see day after day that really good high-grade drill hits is just fantastic. And, what I like to say is it's doesn't matter how good you are as a management team, you can't put the gold in the ground. So, having that sort of quality of ore body box ticked from the start gives us a lot of confidence going into that ramp-up phase.
Your ass is in the hot seat. Let's be upfront about it. There's no doubt about it. You've got the title of managing director. If you tip the big pot upside down and nothing comes out the end, yours is the first door people are going to run to. Mm-hmm. So presumably you don't spend all this money. Banks don't lend you money. Shareholders don't give you money just because Darren Stralow and a couple of others say, hey, we think this is a good thing. You've had other people go through it ad nauseum, surely. Ad
nauseum. And, we've got a really good regulator behind the wall, right, in our bank lenders at Macquarie Bank who are, really experienced project finance, who absolutely, ran the ruler over the ore body, who see all of our data, all of our plans and everything, and are actually huge supporters of the project as well. So, in terms of that, the quality of contacts that we've built up over the years that have done third-party reviews, and just the quality of the team that we have, we've sort of handpicked a team to come and be a part of the Bellevue project. And, amongst other things, the thing that has really attracted them to the project is just the quality of it. You just do not find projects that have, grade, scale, duration, all in your backyard in Western Australia very often. And
talk about some of those metrics. You talk about grade, scale, and the numbers. So once this thing gets up and running, what can we expect to see?
Mate, it's going to be a 200,000 ounce per annum mine, and the way that the mine's laid out, it's going to be able to deliver that consistently. So not just sawtooth its way through, quarter after quarter. 200,000 ounce per annum, $1,000 to $1,100 all in sustaining cost, 10-year mine life from the jump. We've already got over 1.3 million ounces in reserve, over 3 million ounces in resource, still not drilled from underground, so plenty of exploration upside to be seen. So we really are just scratching the surface of this asset, and it's not a small scale underground mine. This is going to be a big scale underground mine, one of the largest underground workforces in Western Australia, and a super high quality workforce. And the quality of the asset, the quality of the people that we have involved, and the quality of the contractors have really attracted there's this great crew. We have, 0 vacancies across Bellevue, across some of our contractors like Develop. We're finding it really easy to attract people because of the quality of the project. And, it's not just the gold, it's the ground conditions as well. It's very hard ground, but very competent and, it does exactly what you want it to. So everything is there and set up for us to execute really well.
Now, you talk about the quality of that team. Let's face it, a lot of you have worked together before and at Northern Star. Tell us a bit about that, the people you've recruited from Northern Star, and of course, you mentioned Develop as your contractor. Develop run by Bill Beaumont, your mentor, your old boss. You've put the band back together in many respects, haven't you?
Yeah, we have. And, you go up to Bellevue and you have a look around at the people, the contractors that we have up there, and it takes you, 10 years back to the Northern Star story when we were, a much smaller company and really starting that big growth trajectory. When you have quality assets, you can attract these people and it's a project that people want to be involved with. So we've sort of handpicked the team to come on board. It's a very similar asset layout and asset type to a mine like Jundee that's in the Northern Star portfolio. So, my COO, Bill Sterling, spent most of his career working at Jundee, everything from junior engineer up to general manager of the site. And, we've picked a team that, we know what we're doing. It's not going to be any surprises because we've done it all before at a mine like Jundee. All we have to do is do the same thing at a mine like Bellevue. And, the WA mining industry is very small. Everybody knows each other. Everybody wants to see each other be successful. And look, the amount of support that we're getting from everyone in the industry has been fantastic.
Now, you talk about the Bills, Bill Beaumont, Bill Sterling. Presumably, as contractors, they've been through all the data too. They know what they have to do. They're not going to sign up to do something they don't believe is achievable.
No, look, you're absolutely right. And bringing someone like Bill Beaumont and Develop into the project, some might have seen it as a bit of a risk when we first put them in. It's their first underground mining contract. But, I understand Bill. I worked for Bill for a long time. And, he loves underground mining, just loves underground mining and loves doing it. He's not going to associate his name with his first mining contract with a project that he thinks is going to fail. So, it is good third-party verification, getting him on board and getting him into the project. But on the other side of that, he's actually come in and performed exactly how he said he would as a part of the contract tender. I'll lie to you if I say I didn't enjoy putting him through the ringer as a part of that and having him as a contractor that I can ring up and yell at every now and then. But look, I've got a really good relationship with Bill Beaumont and Bill Sterling, and you build that up through years of working together. I worked with Bill for over 10 years. Beaumont, that is, and I worked with Bill Sterling for 8 years, I think, before we joined sort of Bellevue together. So, you build that up over time. It's a no bullshit relationship, right? It all comes down to this is what the data's saying. Let's just crack in, pin our ears back, do it, and that's what we've been doing at Bellevue.
So you're in the home straight. First production in the December quarter, ramping up to 200,000 ounces a year. You've got all-in sustaining cash costs of about $1,100 an ounce. So at this gold price, your margins are going to be absolutely bonanza. Plenty of free cash flow, long mine life, high grade. You can't beat grade. Grade is king, as they say. So look at those metrics and the timetable. By the time the fat bloke in the red suit comes along, you should be pouring a gold bar or two, all going to plan. It really does put a target on your head, doesn't it? There's a lot of talk about consolidation. Surely Bellevue must be in the crosshairs of a few hungry gold miners.
Well, look, the answer is it should be, but at the moment you can't focus on that, and we're not focused on that. What we're focused on is just maximising the value from the Bellevue asset. So we have a really clear and simple plan ahead of us to create value through Bellevue. So it's to bring the Bellevue asset into production, which, as you said, is Q4. It's coming up to us, really rapidly. And when you first start a development project, the amount of things that can go wrong is vast and wide, and there's lots of unknowns. When you're on the home stretch like we are, with all our contracts locked in, all our team built, all our people on board, that range of things that can go wrong is really narrow. So we're really comfortable with where we sit on that home stretch. The next thing and the most important thing to us is hitting that production run rate, delivering those numbers to the market that we've promised to the market. And that's what the team is really sort of starting to focus on now. And we think that that's going to bring significant value to Bellevue. If you have a look at the macro environment, as you said, gold price $2,900, $3,000 an ounce Aussie, fantastic. Q4 just in time for us to start gold production. That's when the Newmont-Newcrest deal will complete. So there's potential for a bit of shareholder money to be looking for a good quality growing gold company with a fantastic team behind them, and we want to present that to the market. So I think that's what the most attractive thing is, not necessarily the other corporates, but to shareholders that actually see a team execute a project on time and do exactly what they say they're going to do. That's the big prize for us.
Now, history would suggest that as you close in on those first gold bars, the stock should get a re-rate. You work through that checklist, as you say, that final de-risking process. Traditionally, there's an opportunity there for investors, isn't there?
Look, absolutely. And, you go through, that sort of world-famous Lassonde curve. When you pull the trigger to develop a project, you're sort of going to no man's land until you get into production, and you get discounted based on the risk of developing the asset. And look, no qualms about it. Developing an asset is bloody hard work. And we've got the team working full-time on it, almost overtime on it, just really getting it done. But when you do get into production, you get into cash flow, that's when the cash flow multiples start to come into it. And when you get high quality metrics, like you said, our feasibility study that we put out last year demonstrated $250 million average free cash flow per year for the first 5 years. And that's at a $2,500 gold price with no expansion built into it. You take the gold price to $3,000 an ounce, it's going to add some significant cash to that, and potential for significant multiples coming off the back of it. Now, we have to deliver 100%, but if we do it, the prize is going to be big.
Now, Paul Keating was famous for saying it was a beautiful set of numbers. He was obviously not talking about Bellevue Gold, but if you look at your numbers, 200,000 ounces a year at $1,100 an ounce, long mine life, 6 grams a tonne, it's pretty hard to find fault with the story. And that's why I think a lot of people are saying, look, Bellevue's either going to be re-rated or be taken over. But it also begs the other question, once this thing's up and running and it does what it says on the tin, couldn't you be the predator just as easy as the prey?
Yeah, look, I think that's probably a key thing that is worth pointing out, because we've done it all before in the Northern Star vehicle as well. Is you start off with a high quality asset, you leverage that into other things, and you be ready in the environment. Like what we're building at Bellevue is not just a mine; it's a culture, it's a skill set. We're going to be very strong underground miners, underground geology, hard rock processing, strong exploration. We found a multi-million ounce asset. We've developed an asset from nothing to something. So you've got this unique skill set sitting in a company that you can then go and look for other assets to leverage off. Now, we don't need to rush into it. We've got, a 10-year mine life. So you can be quite picky about the assets that you're looking at, but certainly that platform is going to be there to grow. But I think something that shouldn't be missed is the actual exploration opportunity from Bellevue itself. Bellevue has been well drilled out from surface to about 500, 600 metres below surface, but it's quite a laterally extensive ore body. There is potential for repeat parallel structures. There's potential for repeat flat dipping structures all at depth, and the platforms to drill them from are going to be developed over the next 12 months. So look, expect to see a lot more from the geology perspective. We have geological success that could mean extra throughput through the processing plant. We have the ability to upgrade our plant from 1 million tonne per annum to 1.5 million tonne per annum. And, then suddenly, it all just depends on the grade you can deliver, but that could drive it, if you get the same grade, to be a circa 300,000 ounce mine. So, and that's globally significant. So the platform at Bellevue is still just something that's going to grow.
Now, there's another old saying, there's no place like home, and companies in tier 1 locations, particularly Australia, Western Australia, clearly are seen by investors now as having an advantage. You hear these warnings that come out of Africa almost weekly. I see Paladin got a big whack the other day on the basis that the market was concerned about a report about their security of tenure and the like. It's a volatile place to do business. You can wake up one morning and the asset can be been taken off you. You're in the heart of Western Australia. Does that mean that you think that the big boys, the barracks of the world, are more likely to sniff around? They like that security that comes with being in Western Australia?
Oh, look, there's certainly no place I'd rather be than in WA. And, the fact that we can jump on a plane from Perth Airport and it lands at the Bellevue Strip in an hour is such a huge advantage for, everything from a, operational perspective, from a, management perspective to just be able to get up there so easily. And look, it's certainly a strong preference for where I want to be. I've had exposure to, working with assets in other continents. And it's hard work. There's a lot of time spent on planes, a lot of times away from families, which is really important these days, is to have that balance in life. So it is, it's a huge advantage. I can't talk for any other people's corporate strategies, Paul, but certainly no place I'd rather be.
Now, we're coming up to that first pour. It is the witching hour. Mining companies are notorious for hitting problems at 5 minutes to midnight, but the opportunity is enormous. How are you sleeping?
I'm sleeping pretty good, mate. So I'm an early riser. I get up and hit the gym in the morning, and that sort of regulates me too. But look, I think you can either choose to be too worried or choose to be excited about it. And what I'm confident with, as I said before, is, the quality of the team, the quality of the contractors. We're not asking anybody to do anything that they have not done before. And I think that's the key. All we have to do is go through and execute the plan that we have in place. We've run down all the rabbit holes from a risk management perspective. We've talked to other people that have commissioned plants in recent times and got feedback from them and learnings from them. We brought our team on early to build all the processes and plans and procedures for how we're going to do it. And look, we're just excited about it. And at the end of the day, as I said earlier, the biggest thing is that the quality of the ore body is so good that we're very confident that the gold's going to be there when we turn it on.
And the company is on the cusp of an amazing achievement, isn't it? I mean, going right back to the early days when Steve Parsons and co started drilling holes in this thing, people poured dirt on it. They said it's too old, it's not enough gold there, it's been mined out, it doesn't hang together, all the usual criticisms that are made, partly fueled by a bit of tall poppy syndrome, no doubt, as is usually the way. But over a period of time, they were shown to be wrong. And if the plan now comes to fruition, as you've told the market it will, 200,000 ounces a year, 6 grams a tonne, that's an almighty winner, isn't it? That's the opportunity, I suppose.
It's the opportunity. And for us, look, we don't focus on outside noise, right? We just want to, focus on the data that we have and focus on what we can execute on a day-by-day basis. And, if you build it, they will come. So, we're building the mine. We're on that home stretch now. And, we just continuously, you hear lots of rumours about Bellevue from lots of people. Like, people were telling me on a recent trip that the ground conditions were bad, whereas it's the best ground conditions you'll ever see underground. So, look, we've just got to keep delivering, keep executing. What you will have seen is we've had a higher velocity of news flow in recent months, just as we tick all the little boxes. Just in the last couple of weeks, we've signed our PPA with Zenith Energy, which we're really excited about. We got our final permit that we needed, that we didn't need, until commissioning, but that's come in, so we're fully permitted now. So all of those little questions are starting to move out of the way, and it's just about, pinning our ears back and executing now.
Now, you do have one important point of difference before we go. You talk about being a carbon neutral gold miner. What does that mean?
So actually, just to correct you and be mean about it, we're going to be a net zero gold miner. So carbon neutral is basically just a financial transaction to offset carbon. To be net zero, you actually have to go down all the.
So you're going to go one better to basically avoid, eliminate, reduce, and offset in order to go through the whole hierarchy control and getting rid of carbon to produce a product which can be certified as net zero gold. And we're going to be doing that by 2026. We have, a very clear plan and strategy together to do it. You can do that when you've got a long life asset that you're building from the start. And I think, importantly, a lot of exploration development companies, what they do is they take the path of least resistance through to production, and then they try and fix things later. But you've got all your installed capital, you've got all your culture, all your strategy quite embedded, and it's hard to change. We've had a focus for the past couple of years on this ESG metrics and the net zero gold, because we have the opportunity with the quality of the ore body that we have. And
it's something that we've used as a part of our decision-making process the whole way through. So we now have a clear plan which gets us to net zero gold, and the big backbone of that is the PPA, the power agreement that we sign, which is going to deliver 80% renewable energy to the mine, which is going to be industry leading, and we're going to be able to produce that net zero gold by 2026. And we've also signed a refining agreement. That refining agreement allows for actual marketing of that product. So Bellevue Gold having its own crucible, having supply chain verification, and then the ability to try and find some customers that actually will put a premium on it.
So it's starting to sound a lot like blood diamonds. If you go back many years, the diamond industry recognised that it needed to be able to establish that these gems had been mined and polished without child labour and the like, hence the phrase blood-free diamonds. And I suppose, do you see gold going the same way? You'll end up with a blood-free certified diamond on top of the ring and a zero carbon gold holding it up.
Oh, mate, look, that's the dream, right? And when you think about the market, we're not saying that the whole market is going to be, we want green gold or nothing. What we're doing is we're producing a very small part of the global gold production and then trying to find a niche market or niche customers.
So will you be paid more for this gold?
Well, that's the idea, right? And you think about it, it's the ultimate no downside, all upside scenario in that, the worst case is you get spot price, which is this fantastic, almost $3,000 an ounce right now. But for every $5 premium that we get at 200,000 ounces per year is $1 million, of money that wouldn't have been there otherwise. So there is going to be, it is going to be a journey. We do take the old Kevin Costner theme of if you build it, they will come, from Field of Dreams. But, we have a really, good partner in ABC Refinery who have a lot of existing customers, a lot of premium customers. And so, it's a journey that will go on with them.
It's a fascinating concept. You have got a big advantage, though, haven't you? As you mentioned, you're starting from scratch. It's like building a new house. You're not renovating. You've got all your options on the table from the outset. But you've also got another key advantage, haven't you, in the grade? 6 grams a tonne.
Oh, yeah.
So for every tonne of dirt you process, you get 6 grams. A lot of companies are getting 1. You're getting 6 times the amount of gold from a tonne of dirt. Presumably, that means you're obviously generating a lot less carbon to derive that amount of gold.
So look, it's a combination of the grade and the infrastructure and the renewable energy penetration that we're putting together. But we are forecast to be the lowest greenhouse gas emission per ounce gold mine in Australia from the outset with what we're putting together. And then what we do is then go down the hierarchy control and look at increasing electrification. We're going to be changing the way that we operate to use more power when there's more renewables available. We're a part of a group called the Electric Mine Consortium, which is focused on electrification and harnessing of renewable energy. And by doing all of these things, this just chips away at that generation that we have or the carbon generation that we have as a project and allows us to get that certification of net zero. And because of the infrastructure, to your point, because we're building it the right way, which means taking long-term decisions on infrastructure, which you can only do if you have a long life asset. But because we're doing that early, we're actually going to be able to get that to that horizon of net zero product earlier than the rest of the market. So by 2026, when there's no one else out there that's going to be net zero by 2030. So we get that first mover advantage and we'll see what comes of it.
It's been a fascinating journey. As I said from the outset, there were plenty of, doomsdayers. The naysayers said it wouldn't happen. They've all been proved wrong thus far. The next 6 months is going to be even better. Let's hope that when we come to having a beer at Christmas time, Darren, we're celebrating your first gold pour. I think the market can see, if you look at the brokers' notes are out there, there's obviously being seen as a great opportunity. That re-rate is waiting for the stock. That's where the opportunity is for investors. It sounds like you've gone above and beyond to ensure that it delivers as well as it can. 200,000 ounces a year. It's a big project. Australia's next big gold producer. All the best for the next 6 months.
No, I appreciate it, Paul. We're all working really hard towards it. It's actually really, really positive to just have this, building a project and completing a project as this light on the horizon that we're all pulling towards. And it's actually quite invigorating and exciting for the team. to do it. We're looking forward to turning the big lie detector on in Q4 this year and producing those gold bars.
I'm looking forward to it too. Thanks for your time.
Thank you.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.